Are you unable to make your ends meet with your current job and have taken an additional work? If your answer was yes, then beware, that could be a huge tax implication on your total income that you earn. And to help you understand the tax rules on moonlighting, now we have on the show Anuj Gupta, the tax expert, joining us. Anuj, good evening. Welcome to the show. Before I ask you tax specific question on moonlighting or having a job that allows you to do it, just give us a sense of what exactly is moonlighting. How do you understand it? I think you're on mute. Yeah,
Sorry.
that's okay.
Good evening, first of all, and thanks for having me. So, I was saying, like, apart the current scenarios, like, lot of the IT people are doing the two jobs. Like, one's at the primary job, and like for the money, they are doing the job as a freelancer or the second job. So, like, to do the taxes and all, like to do the money and how they can earn more. So, simultaneously, one person is doing the two jobs. So this is how the moonline concept is, like, I would say, here around the globe.
Right. Now, help us understand. Now, for example, one already has a job going on, and what if, as per their contract, they're allowed to go for another job, which we can say could be a moonlighting structure in an organization. If it is a freelancing job and you are having an additional income out there, what kind of a tax implication would you have to face, keeping in mind the current employment that you have?
Okay. Like, so, first of all, as per the contractual, the employee should go through the employer and employee agreement, that whether they are allowed to do the second job or to take up the second thing as a freelancing, because the moonlighting is like 80 to 90% of the people are doing from the IT sector, and if the persons are doing the same work in two organizations, so that can lead to, I would say, use of an privacy information that one company have, and like, I suppose that one company do not want to share their proprietary information to other people and to other organizations so that they can benefit. So once, like, one if the person is opting for the moonlighting thing, they should thoroughly check their employer agreement. Now comes for the taxation part. Like, we have seen, like, this is the common problem. Like, I can take one example. If the person is having a salary from employer A, and now they are doing a simultaneously job at an employer B. So, and let's suppose they are, I would say, from the employer A, they are getting a salary of a 4.5 lakh, and in addition to that, they are getting a salary of, I would say, as a freelancing job from employer B of like 3.5 lakh. So, like, now both of the employer should not liable to deduct the TDS on the salary. But when the employee or the person is going to file the return at the year end, so their total salary is going to be 8 lakh, which is like, exceed the maximum amount chargeable to tax, and they have to pay the tax. That the person has to make consider that they are being charged at a total income, not an individual income from one employee, from one employer and from another employer. So they have to combine their incomes, whether it is from the job or from the freelancing thing, and then they have to compute their tax liability, and accordingly they have to pay the taxes.
But Anuj, in this example, the nature of your work changes. In one organization, you're a salaried employee, other place you're a freelancer. What if you are a salaried employee in both the cases? Is it the same kind of tax calculation or implication, or it changes?
Like, although the total income will not get changed, so,
Hmm.
like, if I would say that the nature of the income from both of the employer is the salary, so, like, both of the employer will give you, like, for an example, will give you a standard deduction of 50,000, and they will compute and deduct the taxes accordingly. And, like, if you have made an investment under section 80C, like any kind of an ELSS or FD kind of a thing, then they both will give you tax exemption, and they will say that you are not liable to pay the taxes. But when you are filing the return at the year end, so your chartered accountant or your tax return preparer, you will combine your income, and they will calculate the taxes, and then it will amount to a payment of a taxes, which lead to the late payment of a taxes also, and interest thereon also. So people should compute it with together, like, all the income. And apart from that, there may be a scenario that the people are doing the job once at employer A and they are doing the job as a freelancer. So freelancing job, if they are not giving this as a form of a salary, they can also receive as a business income or a professional receipt. So in a
I was
professional
coming on that point, Anuj, because what happens
okay,
is if you're working
sorry.
as a freelancer, a lot of time you have projects, you don't have projects. It's very irregular. So, keeping all these factor in mind, how does one actually calculate the tax? Or you have to show it as a business income. Is that what you're saying?
Right. You have to show as a business income.
Okay.
So, like, government has come up with a section like 44. It's section 44 ADA, where you can claim expenses of 50% or actual expenses, whichever is higher. So, like, if your income, I would say, if your freelancing income is 6 lakh, and you can preserve expenses of 50%. That would be 3 lakh. So your taxable income would be 3 lakh. So nowadays, in the moonlighting kind of a system, in the second job, persons are willing to take not as a salary, but as a freelancing job so that they can save the taxes.
Now let's go tax slab wise. Okay, for example, someone who is earning below 5 lakh per annum from a current job and has an option of moonlighting, or maybe that's the structure that's adopted in the organization. They get a freelancing job outside, or maybe another salaried job. So because the base of the salary is so low, what kind of a tax bracket would that person fall in, and the tax implications would be similar as you just explained earlier?
So like if we go by the slab by slab, so like you can assume as a salary of a 4.5 lakh, then we can have a standard deduction of 50,000. Your taxable salary, like from the taxable salary from the salary is 4 lakh. Now considering your freelancing income is 3 lakh 50,000, you can presume expenses of 50%. Now your taxable income from the business income is like 1 lakh 75,000, and your gross total income is 5 lakh 75,000, in which person may have an investment in under section 80C, which is ELSS 80 and other section. Now your net taxable income is 4 lakh 25,000. Now which is below than 5 lakh, so you don't have to pay the taxes on it. Now let's consider the another one, like in which your salary is 9.5 lakh and you are getting a freelancing of like a 6 lakh. So at a salary of 9.5 lakh, your taxable income is 9 lakh and your freelancing income is 6 lakh. So you can consider as a 3 lakh income. So your income is 12 lakh. After considering 1 lakh 50,000 of an income, your taxable income is 10 lakh 50,000. So for the 10 lakh 50,000 up to 5 lakh, there's no taxes. 5 lakh to 10 lakh, there is a taxes on a 20%. And if your income crosses 10 lakh, you will be taxable at a 30% rate. So then your income would be 1,32,600.
What about the higher tax bracket people?
Like it's like the higher tax rate will be like like I would say it's 34 point something percent, which include the surcharge if your net taxable income exceeds 5 cr.
So, Anuj, now also let's talk about and discuss this as per different tax regime, the old one and the new one. So, so far, does it really impact the way you earn through moonlighting if you have opted for an old tax regime or a new one? No, it doesn't, right?
No, it doesn't. Like only I would say that in the new tax regime, you can't take the benefit of a standard deduction. You can't take the benefit of any investments you have made under Section 80C. Or I would say that if you are repaying a home loan or an interest on a home loan, then you can't take a benefit of it. So if you have all these kind of a things in your bucket, so you should go for an old tax regime rather than a new tax regime.
All right, so that will be all with you, Anuj. Thank you so much for highlighting and helping our viewers know the tax implications if at all they are opting for a moonlighting structure in their organization.